Good morning, everybody. It's the 24th of March. We're Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, not bad. Welcome back, Joe.
Thank you very much.
You look a lot more clever now after spending a week with the data scientists.
Yeah, indeed. I've learned all sorts. It's been it's been nice.
Brilliant.
Nice little
Yeah.
change of scenery.
Yeah, it's nice. Nice place.
Yeah, indeed. Markets haven't slowed down while I've been away. They've been pretty choppy, pretty exciting.
Yeah. Very, very exciting. Yeah, very there's been a little bit of volatility in there. Overall it's well, we've had interest rate hikes, we've had what else we had? We've had oil inventories, we've had gold going above 2000.
Yeah, all happening.
Starting to melt down my rings now, mate.
Is it getting to that stage now? Is it? We'll start seeing all the gold shops in the high streets. We'll buy any
Why not?
gold.com.
It feels like it. Yeah, it feels like we could be there.
Right, okay. Let's get into the latest headlines then. Have a look at what's moving markets over the past 24 hours and then take a look at what we can expect from the day ahead. As Steve mentioned, rate hikes everywhere, it seems, at the moment. Starting off with the Bank of England, they hiked rates by 25 basis points, following on from what we saw the previous day with the Fed. We now have rates of 4.25%. This was in line with consensus forecast following higher than expected inflation data reported on Wednesday. There was a 7-2 vote for the decision, so very much in favour across the board. The bank also upgraded its outlook for the second quarter GDP, with the bank no longer forecasting a contraction and limited growth likely, so avoiding that official recession. The speech afterwards, following the rate decision, Bank Governor Bailey stated that he expects inflation to fall quite rapidly before the summer. He noted that the bank had already raised interest rates a lot, but does not know whether 4.25% will be the peak for rates. We also saw the Swiss National Bank raise rates by 50 basis points in their latest policy meeting, again in line with consensus forecast. The bank pointed to renewed inflation pressures and stated that further rate hikes may be needed. Overall rates at 1.5% in Switzerland. We also saw Norges Bank increase interest rates by 25 basis points, taking the overall rate to 3%. The bank expects to raise rates again in May and forecast higher peak rates of just over 3.5%. US yields drifted lower. We were unable to see any taken there, any ground taken there, with the 2-year yield at just below 3.9% and the 10-year around 3.5. But there continues to be unease in the banking sector. US equities posted strong gains after Thursday's open, but there was net selling later in the session, with fresh reservations surrounding US regional banks. The yen has gained some support. The dollar managed to regain some ground against European currencies as unease surrounding the financial sector continued. The yen also gained an element of defensive support. We've got a number of PMI data points due out today. We've got the UK, US, and Eurozone all reporting PMIs. Expectations overall are for little net change on the month, and the overall data mix will be important for relative currency confidence. So that kicks off around 9 a.m. UK time, with the first one being Eurozone, and then finishes at 1:45 with the US PMI data. Okay, Steve, let's take a look at some charts, shall we? Where do you want to start? Cryptocurrencies?
Yeah, why not? Let's share the screen and get into it. Here we go. Yeah, Bitcoin has had a really sort of like explosive rally over, well, since the 11th of March. And we can see we've taken out that resistance that we've talked about, Joe, 25,400. And we've ran into the big one, the 28,800 resistance level. This is a band of resistance which if we go all the way back to January 21, so almost 2 years ago, we saw that it also acted as support in June 21. So that's where we're getting this sideways price action that we had between May and June last year, where this really sort of like held. We broke through it. We hit that 25,400, and that acted as quite a pivotal level. And now we've broken above that. A little bit of maybe an inverse head and shoulders formation here, Joe. I can't bring myself to draw it yet, because I just sort of like feel that crypto or Bitcoin has got some a lot more downside in it, but I may have to bite the bullet and draw it and sort
It
of like
does look
really.
like a pretty impressive base pattern, to be honest, on that break.
It does. Yeah, I mean, if we took the word Bitcoin away, and I'll be sort of like saying this is the bottom, but get your house on it. But there is, I mean, the one thing
Remove your biases, Steve. Just go
yeah,
by the
yeah, yeah,
price.
yeah, get the algos on it. Um, the one thing I would say though, now we've broken through that neckline, maybe we'd look for a retest. So if I'm really being a honest technical analyst, I'd be saying look to buy dips at 25,400, but keep a tight stop. That's where I am with that. I think it's looking pretty good potentially on the upside. We've had on the shorter term charts, we break down to the 4-hour chart. Looks like it's potentially we're looking to complete this fifth wave in this impulsive move higher. So yeah, a bit of an awkward looking pattern that I don't really sort of buy into that. I'm sure we can sort of like get a more normalized looking impulsive wave, maybe sort of like first wave up here, second wave pullback, and then extending higher. That would be the better way to draw it. But yeah, we're sort of like potentially there is still a little bit of legs in this. This could be the fourth wave and maybe a higher fifth wave. Trying to do my best to be a bit more positive about it. But 28,000, just below the 29,000 level, we stalled at and we reversed very sharply. So we posted this bearish outside candle, which really looked like the end of the rally. We found a base around 26,700 and we've rallied back from there. So they're the levels to watch. A little bit of a range, 29,000 down to 26,700, and trading a break either way of that may not be a bad idea. But remember, you've got this plethora of resistance up to 31,500. Ethereum, the pivotal level in there is 1730. We broke back down below it when we had this sort of big bearish engulfing candle formed on Wednesday. However, the reversal was pretty swift as well, and we've pushed up now. We've hit a high of 1860. That's levels we haven't seen. Well, all the way back here, probably around about August last year. So yeah, that's pretty firmly in an upward trend on the shorter term charts. 1715 to 1730 would be the point at which I'd be a little bit concerned. If we did break back down below that, maybe this five wave impulsive move higher is going to correct. But at the moment, it's eking out that fifth wave. XRP was an interesting one, Joe. This was on Tuesday. We had this explosive rally. I think it was on the back of news that 1,000 or plus banks in the US had adopted Ripple as the or we're going to be replacing the Swift process with Ripples, and this is obviously the coin that's attached to Ripple. So yeah, we saw a really, really big rally, but it sort of wasn't as big as like people were predicting. I think they were saying this is going from like 40 cents to $4 million or something. So it got up to 50 cents though.
Not quite
Before the
4
sort
million,
of
though, I
pullback,
guess.
not quite more 4 million, but you
Closer
never
to it,
know.
though.
One day, yeah, oh, a lot closer to it, yeah, 25% closer to it. And yeah, so that's sort of like pulled back from there. So that's completed the fifth wave, got up to just below 50 cents, completed the fifth wave, pulled back to 41, which was a previous resistance level, going all the way back to the 20th of Feb, and reacting a little bit higher from there, but seems to be stalling as well. So yeah, not much more to sort of like discuss on that front. Let's take a look at commodities. Gold has been really good fun this week. I've had a bit of a fun time with it on the gun to head trade idea, Joe. It's got us back up above the watermark levels that we on our account. So
Saw that. I
yeah,
had
it's
to
been
double check you hadn't been adding deposits while I was away.
yeah, I was tempted. I mean, it's not an easy one to sort of risk the whole 1% because it's we've only got a small account. I think we get like 0.2 or something of a unit on to sort of like for gold, which normally equates to about well 0.9 something percent of risk. But we managed to capture a couple of trade ideas. This sort of like stalling at 2010, the reversal lower, and we got back down to 1935. And that was around about where support was. We were seeing support there, so it felt like a good time to to catch the upswing, and it extended higher yesterday. It was trading around 1977 when we were doing the show yesterday, so it's right smack bang in the middle of support resistance on a daily basis. So I didn't really go with that. I ended up going with S&P, but that failed. But anyway, gold. Where are the levels to watch in gold? So we've had this impulsive move higher. We've stalled at 2003, just in front of the 2010 level. Remember, all-time highs 2075, and we have that 2070 high as well. So we're not far away from their all-time highs, but we have seen this correction back lower, as I've said, and we saw a on the 4-hour chart, we've got a little bit of exhaustion here. We've got a little bit of indecision, doji candle here, and a slight sideways price action. So really sort of like it's pent up. Will it go? Will it not? Don't know. It's all about really the safe haven element to this story is still there. And obviously the dollar story is still there. So like weaker dollar, it's just bounced off the 102 level. So it's supporting it a little bit. And maybe this is what's causing the slowdown in the gold rally. Silver has continued high as well. It hasn't had the sort of exponential rally that gold's had, but we've been up to $23.22. And yeah, and this is, if we look back at the 4-hour chart, we can see that this is a level of resistance. This is where price action has found decent support before. So I wouldn't be surprised to see a little bit of resistance here after we broke through that on the 3rd. Is it the 3rd of Feb? Yeah, 3rd of Feb, we broke through there, back above the cloud. So we're in a 4-hour uptrend and looking pretty tasty. But yeah, resistance ahead up to $24. Taking a look at crude oil, we've been bearish in crude oil for a while now. We did see it respond higher at the start of the week. We got a nice rally out of it. So this week it's been pretty good. We've taken out that resistance on WTI at 69.77, but we've managed to sort of break back down below that yesterday, and it's challenging that level now. So looks to be have done enough really on the upside, but we are at sort of, are we just retesting this neckline break? Maybe. Brent crude oil price action in here was the 75.67 was the similar level. Obviously that's trading at about a $5.50 premium to WTI crude oil, and we're back down below that level also. So it looks like we've had the attempt to break higher. The cloud resistance and some horizontal resistance has stalled this move, and we're looking at maybe potentially breaking back down. So that might be a good one for gun to head. It gives us a good risk reward because we've got some nice resistance levels, and we've just seen a nice reversal on that 4-hour chart. So I might look at that. Natural gas still hanging about around this 210 support level. 210 was the level we got down to. Then we posted a higher low at 222, but we're trading around there now. So again, that looks under pressure. And from the head and shoulders perspective, that looks to have played out quite nicely with this nice little rundown. Again, remember, we've got the bigger head and shoulders pattern, which is telling us that the measured move target is 135. Don't know if we'll see that, but you never know. Let's take a look at FX, Joe.
Yeah, let's do it. Okay, so starting off as always with the dollar index. Steve's given us a little glimpse of that already. But we can see here that prices were trading within this wedge for a period of time. Then we saw the breakdown. We did find some support around 103.62. We held that level for a few sessions before eventually breaking down on Monday. And then throughout the week, we've seen lower prices, so we can remove that for the time being. And where have we found support? Well, it's back at this 50% Fibonacci retracement level. And we can see yesterday we actually posted a bullish hammer candle. So that's actually quite encouraging for the bulls in the short term on dollar index. Just this yellow line you see here, the 50% fib, just to scroll back from where this is relevant, it's this entire period here. So from these lows that we were seeing in May 2021, then obviously we saw a fantastic rally in the dollar index up to September, where that topped out last year, and 50% of that entire up move comes in at 102.15, and prices have found support there. So we did see some support roughly in that region back in February, before then triggering a decent rally higher. By posting this candle today, what we're actually doing is posting a higher low. So potential maybe for the beginnings of some sort of bottom formation here on the dollar index, maybe. It's still pretty mixed. It's still pretty uncertain. Arguably, you could also say there's a much larger top pattern potentially forming here. So it is pretty mixed, but in the short term, certainly today and into next week, we've got this bullish hammer candle, which indicates that potentially we are going to see a short-term reversal. Now, this is also being mimicked on the euro dollar chart. Interesting setup here. So yesterday we posted this shooting star candle into a 78.6% short-term Fibonacci level. So taking a measurement from the high that we posted in February down to these lows that we posted in mid-March, 78.6% comes in at 109.22. We slammed into that, only went a couple of ticks above it before then posting this reversal. So that indicates that this is kind of the top end of where participation has kind of ended on the long side, and we've started to see some more selling pressure. And obviously we've seen some follow through on this today, down by almost 0.5%. Now, I don't want to force the issue on these because I know we get told off for talking about them a bit too much, Steve, but is there potentially a top pattern forming here? This maybe being a left shoulder, this being the head, and then obviously we have the right shoulder in formation here. Now, the reason I'm highlighting this as a potential setup is because often when you get these right shoulder formations, they can end at that 78.6% fib level. So if you want to kind of pre-speculate on this setting up as a formation, looking to target those 78.6% pullbacks when you're kind of suggesting patterns like this may play out is often a good entry point for these potential setups. So long way to go. Highly speculative still, but just something to maybe consider and something that we'll continue to keep an eye on in the coming days and weeks. So let's take a look at cable, because obviously we had the Bank of England yesterday. We can see that prices did form a double top on the breakdown that we saw in early March, but then came roaring back very, very quickly. Let's just take a look and see from this high that we posted in January down to these lows. We can also see that prices rallied into a 78.6% fib level here as well. That's at 123.09, and again posted over the last couple of days some long wicks on these candles into this resistance zone, and we've seen selling occur. Obviously on the downside today, down by 0.33%. So the body, today's body is engulfing yesterday's body as things stand. So we've still got a long way to go in the session, and we've got all these PMI data points due out as well. So things could change, but potentially we're in the process of turning a bit lower, and we could see a short-term period of dollar strength. But overall, this remains pretty range-bound. But as we can see, this 78.6% fib level has done a pretty good job. Let's take a look at dollar yen, see what's happening there. So dollar is struggling against Japanese yen. So due to the banking concerns, we've actually seen a bit of evidence of buying of Japanese yen in the form of it being a safe haven. And we can see that dollar is pushing lower versus the Japanese yen following the break of this wedge. We've got some support zones in and around here, around 130.56 to 120.13. Sorry, 128, 129.13. So it'd be interesting to see if we get any reaction there, but this is pretty choppy for the time being and seems to be favouring Japanese yen for the time being. Let's take a quick look at the commodity currencies. We can see here that Aussie versus US dollar was trading in this kind of wedge formation. We eventually got a break, but there has been no follow through to the upside. Resistance at 67.16 has continued to cap upside advances. We can see multiple touch points at this level and a couple of big wicks on these candles here, indicating that there is no follow through buying going on once we're trying to get above these levels. In fact, the sellers are fading it and prices are moving lower. So again, indicative that maybe we are seeing or in for a bit more dollar strength in the short term. Let's take a look at New Zealand dollar. We can see here we've got the breakout of the wedge. Again, we can probably make out some horizontal resistance in and around this region here, around 62.75. Few attempts at trying to break through, so far been unsuccessful. So it doesn't seem to be much appetite to want to continue buying these commodity currencies and taking on risk once we are kind of making moves through these resistance levels. So that's quite interesting to see. Just one request this morning by the looks of things, unless there's anything else on TradingView, I can't see anything. So just Sterling Oz. So let's take a quick look at that. So this is the daily chart on Sterling Oz, and this area here at 182.75 had provided resistance for a fairly significant period of time. We can see the last time we hit that level was back in December. We then saw a couple of attempts mid-March before dropping off a little bit, but eventually on Tuesday we saw a closing break above this level. So and since then we then saw a pullback to retest the level, and prices have continued to move higher. So that's pretty encouraging really for sterling versus Aussie. In terms of upside targets, I've taken a measurement from this high that we posted in January 2022. So, well over a year ago, down to these lows that we posted as a result of this disastrous budget in September. And we've got a 78.6% fib level at 185.13. So that could be quite an interesting level to watch. That could potentially cap any upside advances in the short term. So it may be that we go on and hit that level, find some resistance, and then maybe see some sort of pullback temporarily to consolidate prices in this region here before maybe then making another attempt at the upside to target these previous highs that we last saw back in January 2022. So yeah, all in all, looking pretty constructive. Short term upside might be limited towards 185.13. So look to see if this support at 182.77 continues to hold, and if it does, then maybe we can look at buying or taking long positions here in anticipation eventually moving higher over the medium term. That's it from me.
Excellent, nice one, Joe. I'll take a look at indices now. Let's dive into the FTSE. FTSE on the daily chart has had a bit of a hammering over the last couple of days. Wednesday, we saw the reversal, breaking down. Interest rates didn't really like the hikes, but considering there's a few banks in the FTSE index, then that was a little bit of a surprise. But I think they're sort of like, they seem to be sort of getting to that point of attempting to work out where the top is in the cycle of interest rate rises. Yeah, under pressure at the moment this morning as well. We've got support coming in at 74.17. That a break of there would open. That would be the low for this last 3 days since Tuesday, and that could lead to a little bit of a reversal. And if you look at the weekly chart, we can see that that would lead to quite a sort of indecisive looking candle on the week after the aggressive sell-off we had. We've obviously this week we've sort of like taken out that 61.8% fib retracement level and bounced from there. It's just whether we can hold on to these gains and look a little bit more promising for next week. That remains to be seen. We've got a day ahead of us with a few figures, so volatility should be playing a part in that. Take a look at the DAX, similar sort of price action really to FTSE, although it performed a little bit better yesterday. But again, are we at this sort of like triple top we're around about the neckline really of that formation? So let's just place it there. It's that's in between this low, which is this double top, and this low here. So this is a nice little point to sort of think, right, this is pivotal level. 15,185, closing above there on a weekly basis would be slightly more positive. Obviously below there, we may have just retested this formation and be extending back down towards where we got to last time, the 40,461, which was the measured around about the measured move target. Dow, taking a look at Dow, hasn't been a great week either, but we're managing to hold on to gains at the moment. Yesterday's price action was indecisive, and we're on the back foot a little bit this morning. So really sort of falling into the weekend, it doesn't really sort of like feel like there's real any sort of sense of urgency or real any short-term trend decision. The 4 hour, we're in the Ichimoku cloud, which is normally a period of volatility where we sort of are deciding whether we're going to break up from this double bottom formation or not. Are we going to remain below it? That comes in around about 32,333.3, all the threes. Nasdaq 100 on has performed a little bit better. We've taken out previous resistance. Let's take a look at the daily chart to actually show where we are overall. We've got a band of resistance up here at the 12,930. That is overall an overriding potential double top. We've managed to sort of take out that high from the 2nd of Feb, and we're above it. We've obviously got above it for a short while, and then formed a bit of a shooting star candle. So that looked a bit negative yesterday when we were talking on the show. However, yesterday's overall price action, we did engulf all of the losses from the previous day, so it was a bit better. But yeah, just waiting to see how this really, where we get the break from here. Are we going to sort of like give up the gains, break back down, and really sort of like see this as a bigger formation of a double top formation? S&P, we're in a positive channel. I was banking on this in the gun to heads yesterday to sort of like break lower. It didn't happen. It reversed higher, took my stop out, and then did play out a little bit lower in the end. So I sort of was right, but completely wrong, if you get what I mean. You know that if you trade regularly. Yeah, so this sort of like these candles don't look don't really give us any real clues on today's price action, I don't think. But really got to watch maybe the support level coming in at 39.18, and obviously for me the 4,000 level is always a bit of a psychological level for the S&Ps. So we're below there, so a little bit on the back foot at the moment after the last couple of days of price action. And I'd be more focused on the 39.18 than I would be on the 40.50 level. Now to gun to head.
Yes, indeed. So this is where Steve and I pick trade ideas live on the video. Obviously, I've not been around for the last couple of days, so Steve's been holding the fort and seems to have done a pretty good job. When I was totting up the total, Steve, you were smashing it last week, so well done to you.
I won two, lost two, but obviously because we use a 2-to-1 risk-reward ratio, that has resulted in a profit. So
absolutely, that's the way to do it,
50%
right?
win rate, Joe. 50% win rate.
Can't argue with that, sir. So we both pick a trade. We both risk 1% of our trading capital. We've got a live account which started off with £2,000 at the start of 2023. It's been a pretty rough ride, to be fair, to start the year. But you know, by sticking to our consistent approach, we do believe that overall we will continue to turn a profit on the account. The trades are closed at 9 p.m. unless the stops or targets are reached in the meantime. And as Steve mentioned, risk reward ratios are always better than 2-to-1 as a standard. So just a quick catch up, Steve, because I just did fill out the P&L sheet that we've been sort of following these on hypothetically for a very long period of time. We can see here that, yeah, there's a lot of black on the screen recently. So we've had a pretty decent run of things. Looking at sort of out my trades on the left, yours on the right. I think you hit a new P&L on your equity high on your P&L, which is very nice. And if we look at the collective that we're both doing, we can see that our balance overall is now making new highs as well. We can look at Steve's individual chart. We can see there a minor new high for him. Mine is actually still in drawdown and has been since November 2020, would you believe? I haven't actually been able to recapture that peak since then, although it's been, you know, steadily moving upwards after that initial drawdown. I still haven't got to those all-time highs. Win rates, important to note, they're around 40% between the two of us. So we don't really expect to make money on these trades ideas as a default, but when we do expect to make significantly more than we're taking as risk, as Steve mentioned with this risk reward ratio. So let's go again, Steve. What are you fancying today?
It's interesting to see that win rate, Joe. I mean, with our intraday trade ideas, we track them. We've been tracking them for about 7-8 years, and the win rates on average for the intraday trade ideas, where we plan the trade a bit more consistently, and we look to buy at support levels or sell at resistance levels or buy, sell breaks, whatever. The win rate's about 45%. So that's quite sort of good to see a lower win rate, because we are sort of almost forcing ourselves to take a trade. So that's definitely something to really sort of like consider. These trade ideas we do in the morning, it's not we're not getting in at the ideal levels that we'd like to. So and it does
gun
show.
to head. You know,
Exactly.
what are you going to trade right now, Steve? I'm putting a gun to your head. What are you going to do for us?
Yeah, it sounded like I was stalling, but I'm not really.
I can go if you
think,
want.
No. I think I'm going to go. Like the one I was going to go with was, you convinced me of this more when you were talking about the dollar. Was maybe selling gold. I was thinking, should I do a get a hat trick of wins this week from gold? I'm tempted now. Now I've said that, I'm going to go for it. I'm going to go for shorting gold here. The stop, ideally, the stop would be above that 210 level. So I'd need to take out that weekly high for me to win on this. But then that does mean I've got to target a move probably down to, well, probably a $50 move, mate. Back down to 1937. Why not? Let's go for it. I mean, I can't see this really playing out in the day. This might be a little bit more of a burner, but there's good reason. There's good risk reward at these levels. We've stalled again at just in front of that $2010 level. We stalled at 2003 or whatever it was. So I could be a little bit more aggressive and be a bit more aggressive to stop, but I'm going to be sensible with it. And I'm going to go for this. The risk reward on here is about 2.2. So let's try and get it on. Again, as I mentioned before, this isn't easy to get this on because we've only got a small account. Look, it's risking. Let me get the stop price in there. 2010. I was risking $19.20. So and the target take profit at. Sorry,
The
take
pips.
profit at 38, around about 38. That's given us the risk reward. So that's one unit we're selling. Yeah, okay, I'll go with that.
Good. Okay, I'm going to take a look at Euro Oz. This is the daily chart, and these black lines clearly represent resistance. We can see here a couple of occasions we touched this region of price. This was back in December 2021. This was in February 22. This one was in September 2021. So pretty significant areas on the daily chart, which we failed to overcome so far. Looking at the price action over the sort of day or so, we can see a bit of stalling here. Big reversal already this morning. Euro's getting a bit of a kick in early doors today. So maybe there's going to be a bit of follow through to the downside. When I was looking at this on the intraday charts, I mean, you know, we're talking about a very sort of small top pattern potentially for me here on a breakdown through 160, 168. Hasn't completed that. In order to do that, we need to see a close on this, but I've got a gun to my head. I've got to do something. I love the fact that it's into a major resistance level on the daily chart, and that also we're getting a little bit of a pattern formation on the intraday. I mean, it's choppy. We've seen some pretty large moves already, but I want to have a go at this in the hope that it does break down. This resistance level continues to hold. Ideally, my stop would be above these highs, but I don't have that luxury because the risk reward ratio just won't be good enough for me to target on this. So I'd like to sell at market, Steve, which is 160, 168 on my charts.
Yeah.
And I'd like to have a stop loss at 162.20.
Yep.
And target and move down to 159.75. So a pretty chunky move to the downside I'm looking for. But you know, we've seen enough volatility in the markets at the moment to suggest that maybe, you know, Friday with all these PMI data points could be maybe ripe for a chunky move to end the week.
Nice, like it, Joe. Good, about 4-to-1 risk reward.
Yeah, happy days. All right, let's see how that goes. Those two trades today. So we mentioned these PMI data points. They are due out, well, starting soon actually. So we've got Eurozone data at 9 a.m. So 23 minutes to wait there for us to get kicked off. So we do have individual countries as well. I think France and Germany posting numbers, and then of course the Eurozone in general. Half an hour after that, we've got the UK PMI data, and then later this afternoon at 1:45, we've got the US zone PMI data as well. Next week, we've got US consumer confidence, we've got GDP as well, amid some other data points that, of course, will be well watched. I think that's pretty much it, Steve.
Nice.
So our clocks change at the weekend as well, don't they? So we're springing forward. Yeah.
Oh, nice.
An hour less in bed.
That's not good.
No, but yeah, bring on the sunshine and the summer months. So all good.
Excellent. Yeah. Cheers, Joe.
Right. Have a great day, everybody. Thank you for watching. Have a fantastic weekend as well. And we'll see you on Monday.
Bye.
Bye-bye.